This time we'd move to a call to order.
A roll call.
I apologize. Roll call.
Councilmember Brown.
Here.
Councilwoman Gussie.
Here.
Councilmember Manfredi.
Here.
Councilmember Smith.
Here.
Councilmember Vitiello.
Here.
Vice Mayor Wade. Mayor Price.
Here.
Mr. Mayor, we have a quorum.
Great, thank you very much. I know that Councilmember Vice Mayor Wade is stuck in the traffic. Councilmember Gussie just came through it and said she barely made it through, so we'll excuse him till he gets here. But in the meantime, we appreciate you being here for our work session today. At this time, we'll move to item 3.1. The Mayor and City Council discussed the 10-year financial plan. So I'll turn it over to City Manager Horst.
Thank you, Mayor Price and members of the City Council. We deeply appreciate your extra time tonight as we present these three items to you. We're not seeking any particular action tonight, but we want to update you and bring these matters to your attention. So the first one is the 10-year financial plan, and you might recall that this is one of the strategic objectives that was adopted in our strategic plan this year. The 10-year financial plan is intended to provide a 10-year perspective on the financial condition of the city's general fund. The plan, as it has its base in the fiscal year 2019 budget, and provides a long-range context for staff and city council to make budgetary decisions or course corrections if needed in the upcoming fiscal years. The document lays the groundwork for sound fiscal management through a process that incorporates strategic planning with historical data and economic assessments, and along with sound policies. And I put down the little comic. I always liked this little comic strip. I didn't have any accurate numbers, so I just made up this one. Studies have shown that accurate numbers aren't any more useful than ones you make up. How many studies show that? 87. So we want to make sure that we have good numbers and good planning. So before I go any further, this was a strategic objective. It's one I felt was very important for us to have, but I'd be very remiss if I didn't recognize our financial team, Angel back there, and others who weren't present. Cassandra Brown, one of them, who spent a lot of time helping me put this together, and a lot of, okay, great, now edit this and fix this, and every time I said, I got it just right, then I said, nope, there's one more change, but appreciate their efforts. So as far as any plan really is based on assumptions, and the assumptions, because we don't know what will happen in the upcoming years, so our assumptions are based on past trends, current information, and the assumptions that are made in this document are very conservative. I think almost too conservative, but I would rather them be too conservative and we'd be surprised. So operating revenues in the local taxes category were forecast based on long-term trends while taking into account the increased economic development throughout the city. We're growing. I think our growth economically will pick up in pace, but there could be a recession or something that could slow it down. Since it is impossible to predict the actions of future legislation, the forecast assumes no more than a 3.55% increase with regard to future state shared revenues. Other general fund revenues, such as charges for services, permits, etc., were assumed to grow at a rate not greater than the CPI, which on the 10-year average is 1.53. Fund transfers were included in the analysis to more accurately track changes in the city's fund balance over the forecast period. Investment earnings were expected to be minimal over the forecast period. They're actually doing quite well at the moment, but we put in the plan that they would be minimal. The analysis did not assume any significant economic contraction in the forecast period. So the beauty of this plan is every year we will update it based on the new knowledge and project out a new 10 years. On the expenditure side, the forecast called for salary and wage to increase at a rate of not more than 4%. Health and benefits are forecasted as a percentage of salaries and wages to increase at no more than 2.08% over the forecast period. And all other expenditures were assumed to grow at the long-term inflation rate of 2%. The forecast allows for slight variations in the allowance for contingencies, and capital expenditures were not included in this analysis, mostly because they're funded through DIF, HERF, and other funds that are not typically general funds. So the outlook is very promising. The housing market is strong and growing. As you know, we had 150 single-family permits this past month, 119 before that. Unemployment remains low, and commercial development shows potential to be very robust over the next few years. The key advantages for the city include high education levels and a high average household income of $80,000 a year. Home values have risen 10.8% over the past year, and with some expecting growth to pace at 12+% this coming year. And you can see the graph on the right that shows the recession, but we've well recovered past the recession, and our dollars, our values are increasing very nicely. So population is typically used to forecast growth in revenues, and additionally, population is the basis of distribution for state shared revenues. And despite Maricopa's significant population growth in the past, the forecast is extremely conservative in its projections. Again, we wanted to be extra conservative. And as you see on the graph, we expect to be in excess of 60,000 in year 2020, and by year 29, be moving in at 85,000 population. It's important to note, however, that if our population continues to grow at a faster pace than other municipalities, Maricopa's relative share of the state shared revenues will increase as well. There's a sharing formula which is recalculated every 5 years. Presently, most of our funds come from property taxes, but you see our sales tax numbers are growing. For a city to have a 50-50, or for sales tax to exceed property tax, is really exceptional, and you see we're close to making that forecast happen. Local taxes remain the largest source of general fund revenue for the city. Property tax is restricted to a 2% increase annually. So our increases come from growth, not from, as you know, we've maintained the same tax rate now for 5 years. Based on long-term trends and current projects, the forecast projects growth in property tax at a minimal rate of 5%. Again, that's not because of tax rate increases, that's because of new construction and growth. Stronger sales tax growth trends, new retail development, and the much anticipated Copper Sky commercial, the forecast charts sales growth at a conservative 3.5%. I suspect we'll see 5% plus in actuality. So the general fund forecast, as we go out, paying particular attention to the graph, you'll see when we get to fiscal year 26-27 that the expenditures begin to outpace revenues. And so that means we've got 7 years to start making course corrections to make sure we don't have that dilemma. And how do we do that? Well, it's a combination of things. It could be based on new revenues, it could be based on spending less money, or a combination of the two. We may find, though, as we move along year to year and we exceed our growth assumptions that we built in the plan, that this number could easily push out 2030, 2031, and beyond. But the purpose of this is to make sure that we are attentive to it, and that we don't wait until we have a crisis, and that we prepare for it accordingly in advance of that pending day. You'll see that the fund balance tends to tick down. That is not because less cash, it's because it's based on a percentage of the budget. And as the budget grows, it's a smaller percentage, but it's not, doesn't reflect any use of the cash. Which is basically what this graph demonstrates. Over the forecast period, the city is expected to see a decline in the fund balance by about 11.6%, but not in actual cash. Other operating funds, the city projects that the HERF funds, city designated operating revenues, will grow by an annual average of 3.5%, while expenditures grow by an average of 2.5%, so that's a positive sign. We currently hold a surplus of $1.4 million for 2019, which is expected. And this surplus and the savings generated from reevaluation of our capital improvement program, which we did this year, will enable us to provide a $1.8 million in repayment to the general fund from HERF funds. There were projects that were funded through the general fund, that now we can use her funds to pay ourselves back. So that's a very positive thing as well. So in conclusion, and our city is on a very fast-growing local economy with very conservative fiscal management. Both the city's economic outlook and financial positions are strong. The 10-year forecast evaluates the city's long-range financial position by considering current economic conditions, operating trends, the city's strategic plan, and financial commitments. The forecast highlights the city's strong general fund balance and the importance of taking steps to maintain revenues in relation to expenditures to avoid any operating deficits toward the end of the forecast period. Thus, through a renewed thrust of efficiency in government, the city stands ready to deliver excellent quality service despite future cost pressures. I think I skipped a line. I can't read with my glasses, and I can't read without them in this particular case. Through a renewed thrust of efficiency in government, the city stands ready to deliver excellent quality of service despite future cost pressures. In fiscal year 2020, the city projects to fully fund the unfunded pension liability for the police department, which would place the city in a better position than almost every city in Arizona. And finally, to continue the pursuit of excellence and quality service and the marketing of the city of Maricopa promises an exciting and stable future for the city. So this is, it's an outlook, it's a forecast. And based on the management policies that you have adopted heretofore, and with this current budget year, with our strategic plan, with our investment strategies, and with us paying close attention to not just what happens today. In other words, the decisions we make today impact tomorrow. So we're forecasting out 10 years to see if decisions we're making are sustainable financially. And I know your goal is no taxes, no new taxes. Matter of fact, your goal, I think, is to try to find a way to dip them down a little bit. And and I think we can. And I think we'll see that as we grow, because number one, we're going to stay out of debt as much as possible. Yes, sir. I see you, Councilman Brown. Number two, we don't print money in the basement like the federal government does. We want to act as if the city's budget, and council, I know you do. I see you work hard to make sure that you protect the city's money, and that the city live on a budget just like every one of us have to do individually. And that's where we need to be. But for a city this size, 53,000 people, with the amenities we have, and with the budget position we have, I think you are to be applauded, as well as the citizens. And I do want to back up to this graph for just a moment. You notice the blue and the red line is the revenues and expenditures. You don't see big gaps. We're not overtaxing the citizens. We're collecting money and we're spending it on services. We're not have this big gap between the two where we're overcharging for services rendered. So we'll be happy to answer any questions. Angel's here. Everything I don't know, she does know, and any others. But our intent was to meet our objective of the strategic plan, but also to provide this information to you and to the citizens of Maricopa. Questions or comments?
Thank you, City Manager. Questions, Council? Councilman Brown.
Angel, where are you? I think it was excellent projection, 10-year projection. The one concern I might have deals with the HERF funds. With the renewed popularity, or the increased popularity of electric vehicles moving away from fossil fuel, that would impact our HERF funds. And I would think we'd probably make some adjustments during that 10-year period, because they're going to be pushing, as far as climate change and everything else, pushing the fact that we need to get away from fossil fuel quickly.
Councilman Brown, I think we all agree with that. I will tell you that there are a number of states that are looking to change their taxation to miles driven, so that the an electric vehicle still puts wear and tear on the streets, even though they're not paying a gas tax. So I think they're looking for parity to make sure, and I think we have to work with our local legislature to make sure that they project out 10 years, and they begin to work on a solution to that particular issue now, so it doesn't bite us in the rear when the time comes. So thank you for that observation.
And just by way of talking about that, I know that the legislature is looking at that. I mean, clearly in this past year, they just changed took away some of the privileges of, vehicles that didn't have to pay full licensure, like natural gas vehicles or things like that. That's being phased back to full amounts, just like everybody else. So, some of those things left over from the alt fuels bill from 20 years ago has now been eradicated. But I think you bring up a good point that, those parities do have to exist in order to make the streets money come in at some point. Otherwise, you can't fix them. So, other questions, council, on this, on the finances? I really appreciate all the work that goes into this, finance team back here and on the side, and certainly City Manager Horst. I know that, there are good times and there are bad times in a city, and so, the hardest, it's easier to weather the storms that aren't really storms in the good times. It's really hard to weather the storms that are storms in the bad times. And I know we try and always think that this cycle always repeats itself, and so you have to prepare, and you have to prepare yourselves for those times in which they are bad, because they will come, and you have to weather them, and you got to get through them, and in order to maintain stability then, you have to maintain stability now. You can't go hog wild and do all kinds of fun stuff and, just kind of get crazy on it, because you never know when those good days are going to end. So I really appreciate the forecast. I think it helps us as a council to certainly know and plan and make sure that we continue to protect the expenditures and ultimately spend money on, that is your money, on the expenditures that are the most important. So we appreciate that. With that, I don't see any other questions on that. Let's go ahead and move to item 3.2. The mayor and city council shall discuss the potential of a bond refund. City Manager Horst.
Thank you again, and this time I'd like to thank both Angel and Brenda, who helped put some of these numbers together in conjunction with a number of outside agencies. And, you talked about wanting to save the taxpayers' money. This is a way to potentially be able to roll back the secondary tax a little bit. This particular bond was initially issued in February of 2010. This is for the land purchase and some of the early operations of design and so forth of Copper Sky. And in that bond, it's callable August of 2020, which is a year from now, at par for that first measure, which is $10,330,000. The refunded maturities include the two 5-year series of the $5.2 and the $6.3 million in 2025 and 2030. It assumes that the series 2019 refunding is structured substantially the same as the bond being refunded, meaning not adding years to it or any of those type of things. So we can wait till 2020 to do a refunding, or we can do what's called an early or an advance refunding. And I wanted to walk you through these two scenarios, partly because rates are really good right now. Matter of fact, the rates are better than when we put this projection together. And secondly, a year from now, we're not sure what may be happening this close to an election, and with the tariff situation, all of that, to get some feedback from you about which alternative we should consider to move forward with. So the current refunding closing is June 2020, the last day of June, August 1st. Using the interest rates as of the June 26, 2019, and again, our current rates are lower, provides an estimated net present value savings of almost $3 million, which is 12.4% of refunded bonds. Now, historically, in my career, which is fairly long, if the savings was between 3% and 5%, we would look to refund to capture those savings. 12.4% is almost unheard of, in my opinion. I've never seen a bond be able to refund that much. That basically means we're cutting the cost of the bond by 12.4%. Now, that's if we wait. If the rates in August, a year from now, is the same as they were when we put these projections together. An advance refunding closing in September of 2019, 2 months from now, using the same interest rates that we used on June 26, provides a net present value savings of $1.04 million, or 8.9%, which is still substantial. And the break-even rise in interest rates between these two options is 35 basis points. So in other words, it would have to rise 35 basis points before it no longer is worth doing it. So this graph shows, if we had, if the basis points got better, equal, or 10 points worse, you can see the savings from 1.04 to 1.1, 1.04 equal or 976,000. So either way we save money. One's 12.2%, one's 8.9. One's we do almost immediately, and we're pretty sure that the feds have dropped rates, we're in a good position. We can capture about $1 million in savings. Or we can wait a year and probably capture more, but only if the market's right. Only if the interest rates are still where they are and they haven't risen because of some crisis in the nation or something that happens. So the debate is, do we take $1 million now and save that for our public? Or do we play the cards for another $200,000 and see what happens in about a year from now? My recommendation is that we probably ought to consider going forward now. That would be the savings of about $1 million that would come off the secondary rate. It wouldn't be a huge savings to every household, but it is a savings and is moving in the right direction. If you instruct us to start putting this together, we may find that the data has changed, and we will report that to you. But I guess all I'm asking tonight is if you feel like it's worth our time to at least to begin to engage in the process, to formally begin to put the numbers together and to evaluate more closely, and then bring back a formal option to you.
Council, thoughts? Yes, Councilmember Smith.
Thank you for that presentation. If I were managing my household and I had this option in front of me, knowing what the economists say about the uncertainty of the future in the next 2 to 3 years, I would take advantage of this now in my own budget and make this $1 million savings for the city. So that's my input.
Thank you. I believe that heard the echo on Councilmember Vitiello, also Councilmember Brown, Vice Mayor, Councilmember Manfredi, thoughts? These are good. Councilman, I think we're all in agreement. Let's move forward.
Thank you, Mayor. We'll engage in the process, and if something changes, we'll certainly report that back. Otherwise, if we're in this range, we're going to proceed forward. Anything, Brenda or Angel, you would like to add at this time? Okay. Thank you. This chart just shows that, over the next 10 years, we save roughly a little over $100,000 each year, and that's a savings that not the city corporation enjoys, but the city, the people enjoy.
Right.
So, thank you.
No, thank you. Appreciate it. Great. Well, that's 2 for 2 so far. Let's move on to 3.3. The Mayor and City Council shall hear an update on the Santa Cruz Wash Floodplain Project.
Thank you, and I'm going to turn this over to Josh in just a couple of moments. We've been engaged very heavily in this project since I've been on board. We've been meeting monthly. We've been making good progress. The project will remove approximately 10 square miles, 6,400 acres out of the floodplain. The project will incorporate over 7 miles of total channel, including existing channels, which will be explained by Josh. We're currently 2 months behind schedule, waiting for comments from the Gila River Indian community. We know that we'll get them. They're being supportive. It's just their process. The project is projected to cost around $64 million. However, approximately $10 million may come from the U.S. Corps of Engineers because a portion of this project meets their project on the FEMA Corps project. And the engineers estimate that we're probably $10 million more than we need in bank stabilization costs, so we're thinking maybe closer to $46 million. That may sound like a scary number, but that's less than we spent on Copper Sky. And the thing is, the return of investment could result in $1.28 billion in new development, a 28-to-1 return. And most of this will be paid by not current property owners, future property owners and developers and others who would benefit from this project. So I want people in the audience to know you're not going to pay for the $46 million. Those who would benefit from this by opening up new lands would be the ones that pay for it. So I've asked Josh to walk us through the updates, and just tell me when you want me to flip slides, and I will do so. Or you can come over and get the pointer if you'd prefer.
This one gonna work?
I don't know.
He's got it.
Josh got all dressed up tonight. He's looking sharp.
Dressed to impress.
I got some photos.
All right, good evening, Mayor, Vice Mayor, members of council. I'm just going to give you a quick update on this. This is from the slides that were prepared at our last update with the stakeholders. This indicates, as you see, right now we've gone through Pinal County for review of some of our study data. Let me back up a little bit in this and just kind of refresh your memory a little bit on what's happened up to this point on this project. We've been working on this project for several years now. We had gotten to the point where we were far into DCR, ready to initiate design that would get us to the conditional letter of map revision. At that time, the Army Corps of Engineers came forward with their study, and the data from that study presented significantly higher numbers, flow numbers coming across the railroad tracks. And so we took a step back, and for the better part of the last year have been doing analyses at the behest of the stakeholder group and sometimes paid for by the stakeholder group of how that flow will affect the city so that we can understand what the existing conditions are through the city. So far we've gone through county review with those analyses. We've gotten review comments back on those. We've got a few revisions that need to be made, but we're waiting for Gila River Indian Community comments to come back, which as City Manager Horst indicated, we're hoping will be soon. We know that the governor has supported the release of them. We're trying to get those taken care of quickly. All right, I'm just saying I got the right button here. Very good. So the baseline conditions, I know this is a little bit difficult to see on your screen, but the key takeaway from this is the result of the study that we've been doing for the last several months. This is a Flow 2D study that shows what the actual elevations would be of floodwaters coming through here and the flow rates, which gets us to the more important component as far as the Gila River is concerned. What are those flows as they cross the city boundary and into the Gila River? Their concern primarily being that what we're sending across there is no greater than existing conditions. The table on the top right shows that these numbers have been addressed for both the original FEMA flows and for the Army Corps of Engineers flows. The idea being that the channel will be designed for the FEMA flows, but with sufficient capacity to handle the Corps of Engineers flows. The significant components to this project, the interception, conveyance, and storage being a major element of this. A standard practice is to assume a certain infiltration and storage over a distance of flow. And they've taken that assumption. This is based upon studies that the county has done in the past. Assume so many acre feet per mile of storage. And in order for us to be able to address not having significantly more flows coming across the boundary into Gila River, we've got to make up this storage within the confines of our project. What you see on this screen here is what the initial project would have done, a channelization through the city with 3 storage basins, 2 at the south end and 1 further north up near U of A. That design has been refined, and we'll show that in a later slide here. This is now the recommended alternative that's being explored. All of the stakeholders are in favor of this alternative. What's being proposed right now is the channel that was originally proposed along the North Santa Cruz Wash alignment, as well as modifications to the Santa Rosa Wash, which itself has more capacity than it needs right now. And we would start with an interceptor channel at the south end of the project that would take the Santa Cruz Wash waters and bring them over to the Santa Rosa Wash, and then allow those waters to flow up and out into the Gila River. This slide just shows what those capacities are now. We're no longer looking at trying to take the full, I think we were looking at 17,000 CFS in the North Santa Cruz Wash prior, Now, most of that is staying in the Santa Rosa wash, which means that the Santa Cruz wash can be smaller than what was originally anticipated. Right now, the dimensions of the Santa Cruz wash are more dictated by those flows that come off of the storm, or the watershed from the east of the city, and not so much what's coming up from the Santa Cruz wash. This is a profile refinement graph that shows what we'd be doing through Santa Rosa Wash. You can see there's very little actual change to what we'd have to do to Santa Rosa Wash to make it able to accommodate those flows we anticipate going in there. And this is broken down by segment from the community to the golf course to the railroad, railroad to Porter, Porter to White and Parker to Peters and all of those are small areas of cut, the largest being 0.73 average depth, 0.73 feet average depth of cut. So not a significant amount that's going to be coming out of that. The area of Peters and Null to Union Pacific, that's a brand new channel. You'll see that in a later slide. So that's the more significant. That's 11.5 feet of cut that'd be coming out of there. But overall, not a massive change to the topography of the Santa Rosa. This just highlights those segments. You can see existing condition is the dashed line in this graphic, and then the cut would be the more bold graphic, more bold lines below. Again, the Union Pacific, and this one, the station 240 plus 00 to Porter is probably the most significant change through existing Santa Rosa, because it means taking out a shelf that exists there for a trail system right now. It'd be a modification to that to just to a 4-to-1 slope and increase the width of the channel. Again, Porter to White Parker, not a significant change to existing conditions. White Parker to Peters and all, also not major changes there. And then this shows what that equalization channel would be. It would be roughly along the Peters and all alignment to the north side. It would be a 4-to-1 slope, roughly 80 to 170 feet bottom width. Above that, also surrounded in green, this is that offline storage that previously, in previous design, had been addressed through the 3 throughout the city. Now we're talking about 1 right at the major inlet for this flood solution. So this would take this would be offline storage, floodwaters would flow in there and would mitigate how great a flow, what the cubic feet per second would be as they flow down the channel and get into the community.
So Josh, this acts as a spreader basin, right? Isn't that what they use the terminology for? Where it's kind of slowing it down, spreading it out, and letting, the raging water kind of roll on, but it's taking off some of that cubic feet per second, correct?
Mayor, that's absolutely correct. It will flow into there, spread out, and then it'll sort of flow in from the east side and flow back out from the west side into the channel.
And part of that's to make sure we don't send any more flows to Gila River than they traditionally admit, so we hold it back and release it more slowly in a controlled environment, right?
That's correct, sir. This is a profile of what we would be doing along the Santa Cruz wash. The existing wash conditions there shown in the dashed lines. This is a more significant change to what exists out there, but as I indicated before, a smaller profile than what was originally anticipated when we thought all of the floodwaters would go through there. And I apologize, it's a little bit hard to see this, but at the north end, it's about 150 feet along the bottom, 4-to-1 side slope. And as we get closer to the south end of the project, it narrows down to about 80 feet at the bottom. The angle has been slightly adjusted on this as well from original proposals, because this will now accommodate some of the work that developers in the area plan to do and take some of that flow that's coming from the east and intercept it along there. So originally we had planned for this channel to run parallel to Maricopa Cascarain Highway. Now we've angled up and intercepted where their properties are and where their channels are intended to be. This is a sort of broad brush breakdown of what the anticipated costs are in there. As City Manager Horst indicated, this is a little bit robust with regard to the channel cement. They think that they can reduce that by about 50% through some design modifications to that. And then this assumes some haul costs for materials and then some right-of-way, or some land acquisition costs as well. And then here's our schedule, just to kind of give you an idea of where we are. City Manager Horst indicated we are a little bit behind schedule, waiting on Gila River Indian community comments to come back before we can refine the Flow 2D studies and get them back to county and Gila River for hopefully finalization. Next steps beyond this will be to complete the DCR and proceed to the 30% design and conditional letter of map revision for submittal to FEMA.
Josh, give them the dates, because I know they can't read them on there. When are we going to do the DCR? What was that date? I can't read it on mine.
The DCR was showing through August of this year. This was again based upon where we were about a month and a half ago. That's going to push out a little bit. Design and conditional letter of map revision intended to start about July of this year, with about 1 year duration for that design and getting through the FEMA process of the conditional letter of map revision.
It's not just submittal, that's A to Z.
And then he's got schedule durations in here for environmental clearances and final design and permitting. Those would be ultimately on the, that would be part of a separate project, not part of what we're doing with this.
And then, in addition to this, ultimately, there are two other components. One is the financial mechanism by which we pay for it, and then two, maintenance thereafter. So we've been working with the flood district about the possibility of them assuming maintenance for it. The maintenance costs are fairly insignificant as long as it's maintained. And then the financial tool, bonding is easy, getting the money is easy, but deciding whose fair share and making sure that that's managed properly. I suspect the city will end up being the manager of the financial tool that will determine which developers owe what and who's getting what degree of benefit. I suspect there'll be some debate on that once we get down to that, and that will probably take some time. So we've started that process too. We're in our infancy compared to the rest of it. But traditionally, you wait till you get a Clomar design, then you start thinking about that piece of it. We're thinking about it now because, in truth, we are already finding that ready-to-build lots are becoming a short supply. We have a lot of lots platted that haven't been put their infrastructure in yet, but we're noticing that developers have to start platting new subdivisions for future development. And therefore, this becomes very critical to continue to move this along.
City Manager, maybe you can explain a little bit to the audience on something you touched on earlier, but why is this so important when you look at, clearly we all understand the value of pulling stuff out of the floodplain, but when you go back and you talk about the U.S. Corps of Engineers, we've been working very closely with them, but there's a lot of process and a lot of rigidity and a lot of challenges getting Congress to fund things, et cetera, et cetera, et cetera. And those can be very long projects. Well, simultaneously, we've been running this project and trying to catch it up to speed, and we've kind of reached a critical mass moment of potential hybridization to bring them together and create something really unique at a much faster pace. So can you talk a little bit about that?
Yes, a couple of things before I get to that. On the North Santa Cruz wash, that's now taking about 30% of what was originally anticipated. So that impact through the heart of the city is small. And you remember the Corps of Engineers plan was to have a mile. We're now talking about 150 feet at its worst, I think it was, versus a mile swath. And the beautiful thing about the Santa Rosa wash is we're using a natural waterway that's already existing and just using it to our advantage. But remember, our preferred program through the Corps came back and said it would cost $160 million because they don't value property that's yet to be developed under their economic analysis, even though this land is to be developed. So that it was impossible. So the other option was this mile swath through the city, which would add East and West Maricopa and 2 cities, and you can imagine the loss of land for development, let alone public safety services and connectivity and utility runs and all those type of things. So while we've been working on the core project for all this time, we've been working on an intermediate solution as well, and that's what this amounts to. Again, 6,400 acres based on just traditional housing patterns that we've employed here or seen here in our city comes up to about $1.28 billion based on today's value. Now, if some of that's commercial or industrial or office, those numbers go up. So for every dollar we invest, we're getting a $28 return, which is, you know, you ask people who want to invest money, they're going to jump on that bandwagon pretty quick. Now, what does that mean to us? That means new development continues to pay the cost of living, public services, utilities, all those type of things in the city, and we don't have to raise people's taxes. What does that mean to us? It means hundreds and thousands of new job opportunities. So our youth, when they get educated, can come back here and work and not have to live somewhere else or travel to other places. What does it mean to us? Higher quality of life. It means that we can continue all of the principles that you've put in place to make Maricopa the special place that it is. They won't get lost along the way because we don't have the resources to support it. So will the city grow? Yes. Will we have more people? Yes. But we have this saying, stay small as you grow. And we as a city can do that because if we remain responsive to the people and we plan this the way that it's been planned thus far and going into the future, we may be 150,000 strong, but we're going to feel like a small knit community that it is today. And frankly, I've never seen a 50,000 population city that feels like a small knit community like the city of Maricopa. So this is probably the premier economic development tool. And when we talk about economic development, we're talking about raising the community's wealth, not just city corporate, the community's wealth.
Perfect. Thank you very much. Josh, do you have more presentation?
I believe I've got one more slide.
By all means, proceed.
And that's just to let you know what next steps are coming up in this progress. We've got to, as I indicated, we have to resolve the comments of the Gila River Indian community. Then there will be revision to the Flow 2D studies. Those will go back for final review, hopefully with county and Gila River Indian community. Refinement of some concepts. There's a note here about Santa Cruz Interceptor. We had talked about that at one point, but that's no longer a concept we're pursuing. Then they will put together their recommended alternative. They will model that alternative with the same software that they utilize to do the entire city modeling, and then document study and report development.
Perfect. Council, any questions at this time? Yes, Councilmember Vitiello.
Josh, I was just curious, and Rick, how far behind would you say?
2 months. I'm sorry.
How far will we be behind in getting these final plans?
Well, our self-imposed schedule, we're 2 months behind.
2 months?
Yeah. As government goes, that's the speed of lightning, though. So we're doing pretty well.
Okay.
Especially governments we don't control.
Yes.
Excellent. Any other questions at this time from anybody? Okay. Thank you very much. That was very helpful, very exciting to see these things starting to progress. We've worked so hard for so long on all of them. It's nice to see that they're coming to fruition. We appreciate all of the hard work of staff and our supporting governments and regions around us, because it takes a lot of coordination. This is not something we get to do and make happen all by ourselves. It takes a lot of people on the ground making this work. So again, many thanks to everybody involved. That closes our work session for this evening. We're thankful for all of you for being here. And with that, council can have a motion to adjourn work session. We will reconvene in our regular session here in about 10 minutes.
So moved.
Motion, second. Any further discussion? Seeing none, all in favor say aye. Aye. Any opposed? That motion carries. We'll reconvene in 10.